All right, I have almost 3:02 by my watch. Matt, I have unmuted you, so let us know. Are you still with us?
I am. Good afternoon.
Excellent. Good afternoon. Good afternoon. All right, well, let's go ahead and get started. Let me get the details out of the way to begin with. Welcome to our Thursday edition of our daily action call. It is Think Ahead Thursday, a kind of a two-part call today. I'm going to start off today with Matt Martin from the Federal Reserve Bank of Richmond. And then Luann Flanders Steck is going to join us. A really meaty call. One, we're going to talk to the Fed. Two, we're going to talk about making sure that you've got all the documentation, you've got all your ducks in a row, so to speak, if you have gotten your PPP loan, to make sure that you're going to be able to get that loan forgiven. So some good, really meaty information and some things that you'll want to use if you're a business owner in Greensboro. So let me start off by saying we would love to have you follow us on social media. We're on Facebook, we're on Twitter, we're on Instagram at GSO Chamber. That's at GSO Chamber. We are recording these calls. We're putting all this information on our website. Greensboro.org/COVID-19 is where you can find all of that. We've been doing calls for weeks now. All that information is archived on there if you want to go back and take a look. If you have a question and you're looking for where you might find the resources that you're looking for, you can go to that website and find just about anything that you need. If you can't find it there, call us or email us. We'll help you find it. If you're a member, you'll be getting an email on a daily basis that talks about these calls and brings you up to speed with things that you need to know in the middle of this COVID-19 crisis. If you're not a member, again, you can go to our website. We welcome you to the call. We're glad you're here. So let me go ahead and get started again, since we've got such a meaty day today. We want to get rolling and introduce Matt Martin. Matt is with us. He's the regional executive at the Federal Reserve Bank of Richmond. He's based in the Charlotte office, where he leads the bank's outreach efforts across North Carolina and South Carolina. He joined the Richmond Fed as a regional economist in 2006 and was promoted to his current role in 2009. Prior to joining the bank, he worked as a senior economist for Moody's Analytics and as an analyst at the Congressional Budget Office. He also spent time as a faculty member at Kent State University, where he taught macroeconomics, money and banking, and economic history. He's a Pennsylvania native, and he's got a bachelor's degree in economics from the U.S. Military Academy at West Point and a doctorate in economics from the University of Delaware, which he earned after completing his military service. Matt, thank you for being willing to join us today. I know you're incredibly busy, but we really do appreciate you being with us.
Hey, it's a pleasure to be with you all this afternoon. Thanks for the invite.
Oh, my pleasure. My pleasure. So let's start off. The data that we're looking at nationally, internationally is crazy right now, almost off the charts in many cases. What are you looking at? What I wanted to say unemployment data. I'm sure that's one of them. What data are you looking at that's helping drive Fed policy at this point, given all of the noise that we're seeing in the system? What are you focusing in and zeroing in on?
Yeah, it's the noise, but it's also how quickly things have moved in the last 4 or 5 weeks, which means data sources haven't caught up yet. We have, you mentioned unemployment. We have labor market data from the Bureau of Labor Statistics for March, but we don't get the April data till May 8th. So that's pretty stale. And that's true with a lot of the data. So a couple of things there. You can look at some non-traditional data sources and get a sense for it. So open table bookings are essentially zero, for example. TSA screenings are 4% of what they were a year ago. And then weekly, you can look at the initial unemployment claims, and those came out this morning. So as of this morning, the national level, we have about 26 million initial unemployment claims in the last 5 weeks. That is almost 20% of our workforce. So certainly as an employment event, you can see how bad this is. And then to really get a sense for it, and this is sort of part and parcel of what we do even during normal times, but we've obviously stepped up efforts now, is we're trying to expand our network of businesses that we talk to. We can't really do policy well unless we and all of our sister reserve banks across the country have this regular interaction with the business community. It gives us a real-time read of what's happening on the ground, and it tells us a lot about the why. Data just tells you what happened. It doesn't tell you why. So we're getting a lot of rich sort of stories around business decision-making in this time period. So that's the gist of it, and it would suggest that things are as bad as you think they are from an economic perspective.
And so as you go forward, let me pause for a second and let folks know if you have a question or something that you want to add or you want Matt to address, please check that chat function down at the bottom there and put it into chat. We'll make sure that he answers the question or whatever action you want him to take on that. So you do mention that things are pretty rough out there. Are there any bright spots in the economy right now, or maybe I should say less dark spots that you're seeing out there that you're looking at?
Yeah, I think that latter characterization may be the right one. A colleague of mine was talking to a business today who actually had two parts. And the first part essentially has no revenue, and then when he talked about his bright spot, it was the side of the business that was only down 25%. And I think as you look across the economy, the things that we aren't doing ourselves, going to restaurants, shopping at stores, going to movie theaters, those parts are really hit hard. Travel, hotels, those are the hardest hit places. And when you look at the unemployment claims data, that shows up in the data pretty clearly. And then you back up from that, the manufacturing that puts those products into the stores, including the major auto manufacturers are shut. Boeing down in South Carolina is shut, and all their supply chains, and we've got those here in North Carolina. They're all shut down for the time being. So that looks pretty bad. But other parts of manufacturing and retail that are essential are doing fine and even better. So obviously grocery stores are up. Any of the manufacturing. The one interesting one I'm tracking is food manufacturing, which is having to make a switch for a lot of the stuff that was going to restaurants. They have to figure out how to get more into grocery stores, which is where it's needed, right? And that's a challenge, but if they can overcome it, firms have some opportunity there. And then on the service side, a lot of it's just service-related companies. Certainly, the banks have been busy doing PPP loans and other lending, and those lenders can work out of their homes as needed. A lot of other service providers, legal services, that sort of thing, accounting services, they're all just working from home. And other than that, it's sort of business as normal for a lot of them.
Mm-hmm. We've read a lot over the past few weeks about the Fed's involvement in this economic emergency. Help us translate what the Fed's involvement means for Joe or Jan, small business owner.
Sure.
How does that translate to folks who might be on this call?
Yeah, and I'll make one point before diving into the details. So when you go back to the Great Recession, which originated in housing finance, the health of the banks was at issue. It was very much an episode where we as the central bank were, in the first or second seat, as it were. It was really on us to respond to the financial system collapsing. And I think that was really important. This is very different in the sense that it's driven by healthcare policy first and foremost, and then we're trying to clean up the economic fallout in the back end, a lot of which is a fiscal response. And I will give credit to state and national legislatures. They have moved faster than they probably ever moved to provide some relief. So the part where we come in, and we are able to move pretty quickly as an independent central bank. First and foremost, the background for all of this. We went into this with a healthy banking system. And I think that should not be understated. That's a very different starting point than the last economic cycle. So that's important. And the overall economy was quite healthy as well. And then we put out, I think the total is 11 different credit programs right now, or including the pending one I'll talk about. A lot of those are designed to support proper functioning of credit markets. So even though your typical business owner doesn't see what's happening there, it's making sure that there is not a freezing of credit that eventually backs its way into the banks and affects Main Street lending. So a lot of these are credit facilities that are important for that purpose. And some of those we stood up for the first time in the Great Recession, but we're doing additional ones. So everybody, your next topic's on the Paycheck Protection Program. We've stood up a liquidity facility, so your banker who you're getting your loan through can place most of that loan into this facility, get their capital back out, and do more lending. So we're freeing up the banks to do more lending through that facility. And then the one that's been announced that has not yet opened up is the Main Street Lending Program. And that's sort of designed to hit between the Paycheck Protection Program and some of the facilities aimed at the really larger corporations. So we're trying to help out where we can and trying to see that credit provision is available for all sizes of businesses.
Very good. I'm not sure that I would be allowed to host this call if I didn't ask about the R word. Are we in a recession at this point? Are we headed quickly towards a recession? Where does the Fed see the economy right now? In terms of the R word.
Yep, we're in a recession again with now 26 million people having filed for initial unemployment insurance. That's an employment event we haven't seen in many, many decades. So that certainly means we're in a recession. It certainly means that the second quarter, the evolution of GDP will be March. This settled in, and it was enough of a hit in March that at the end of this month, when we get our first read on GDP for the first quarter, it's probably going to be a negative number, maybe on the order of 3 or 4%. The second quarter, and I'll note that these get reported on an annualized basis. So when we get to July and you see quarter two and it's a minus 25 or 30%, that's a quarterly figure put into an annual rate. That doesn't mean the economy is going to end the year down 25%. And then it's a question of, as we open up, what does the rest of the year look like? How quickly do we stabilize and then start to see something of a rebound? And healthcare policy is going to have some say in that as it tries to respond to the virus. I'd note China's consumers are back about 50% from what we can tell. So it's not all the way back by any stretch, but they're seeing more activity, and they're a couple months ahead of us anyhow. Right.
And I think you made a point. I heard somebody in our community make a point the other day as well, is that this recession is much different than others, in that businesses can't wait to get the green light to go ahead and get started up again and put their employees back to work and let's get going again. And that's a weird spot to be in, to be honest.
Yeah, it is. But it's the nature of the shutdown, right? There was not the shock to the economy was a health shock.
Right.
It was not what we've seen in past years around what kind of are the typical causes of recession that we're used to. Gotcha.
Man, I'm looking for questions and I don't see any. I'm out of mine. If there's anybody who's got a question, please do stick one in that chat there real quick. What didn't I ask you, Matt, that you're thinking about today? I mean, obviously this thing changes by the hour. So what has today thrown at you that you didn't expect maybe yesterday?
I sort of mentioned it. I keep hearing stories about the difficulty of getting food into the hands of consumers that had been going to restaurants. You probably all saw the news stories. House of Rayford in Raleigh, and they're doing this in South Carolina, I've learned as well. Just taking truckloads of chicken in 40-pound boxes and just telling people, hey, we're going to be at this strip mall at 2 o'clock. And that sort of, that's because most of that chicken was going to restaurants or someplace different that can't use it now. And so they got to figure out what to do with it. So that sorting through those kinds of supply chain issues is on my mind. And I'll just say I am open to hearing stories of what everyone else is seeing. So anybody on the call that is either willing to talk, or I would note we do monthly surveys and we're always looking for more survey participants. Happy to help connect you with our folks that way and get your participation if you're interested.
And Matt, we'll post your email address here so folks can get in touch with you via email to do that, because I think it'd be good to have a number of folks from Greensboro under your tent there for those sort of things. And to be honest with you, we've seen some of those truckloads pop up at our Friendly Center shopping mall selling steaks and that sort of thing. And I wondered what exactly was going on. And now you make a whole lot of sense for me, that those were going to restaurants and they can't put them in smaller packages, and so come get a deal on the food that they were going to have to get rid of if they couldn't sell them to the restaurants and others.
That's right. Yeah.
So, quick question, a couple of questions on the Main Street Lending Program. Where is it in the process? I think, in Atticus, this is right. I think the comment period ended. So where are we now that the comment period is over?
So I think we put out an initial term sheet on April 9th, had a comment period through, I think Thursday or Friday of last week. And it's really the Fed and the Treasury then sorting through that feedback and trying to nail down the details. I don't have a time frame when they're going to stand up the facility, other than it'll be as soon as they can and as soon as they work through some of these particulars. I think, if I remember this right, I think they got a couple thousand comments in a short period of time. So,
gotcha. Wow.
Yeah, they're trying to work this. This is a new one for us. So, some of the other facilities we stood up for the first time in the Great Recession. So we had a playbook. This one's a little bit different. So
gotcha.
we're working through that.
Gotcha. Great.
You can look at the draft term. You can look at the draft term sheet, and if it's updated, it'll be posted on the Board of Governors site.
Okay.
Board of Governors of the Federal Reserve System.
Okay. Great. Another question, is the Fed concerned about the amount of additional debt that the U.S. is taking on through these relief efforts? If so, why?
I assume it's federal government debt. That was a concern. Yes. That was a concern before this episode, the levels and the trajectory, I would note. We were running nearly or about $1 trillion deficits when the economy was at an unemployment rate of 3.5%. So yes, that is a concern, but I would say let's address the problem in hand, and then take the time to fix that over time after we survive this particular crisis that's in front of us, because this one's a doozy.
One fire at a time, or perhaps the larger fire at a time, right?
Yeah, that's right.
It. Totally understand.
Right.
Totally understand.
Yeah, but that's got to be down the road. That's got to be something that gets attention for sure.
Yeah. Well, very good, Matt. We're at 3:20. You've been very generous with your time with us. We appreciate you being with us. We have posted your email address on our chat, so everybody can go there and take a look. If they have an offline question they want to ask you, or they want to tell their story, or they want to be part of the ongoing surveys that you send out, they can email you, correct, and get in touch with you, right?
Happy to hear from folks. Appreciate the time this afternoon.
Matt, thank you for being with us. I appreciate it very much. Have a good day.
You too.
All right. With that, I am going to turn it over to Luann Flanders Steck, who is with Launch Greensboro, our entrepreneurial side of the house, and let her take over the next half of our Think Ahead Thursday. And of course, we need to think ahead, especially those businesses who have gotten or are going to be getting, I'm going to be very optimistic on this, they're going to be getting Paycheck Protection Program loans that are forgivable. if you play by the rules. And so there are some things that need to be done in order to play by the rules. So, Luann,
Yeah.
I'm hoping you're off mute. There she is. And you can take it from here, and let's tell some folks how to make sure that those loans will be forgiven in the end. Take it from here.
Okay, great. Thanks, Brent.
Thanks, Luann.
Matt's still on. Thank you for being here. I really appreciate that insight. I have a lot of questions running through my head now after hearing all of the details you provided. So welcome everybody to the second half of Think Ahead Thursday. We are going to use some video. Our presenter has a presentation that will be made available. It's really, it'll be beneficial if you can see it, but if you can't, you'll be able to see it via replay, as Brent mentioned earlier. Again, please use the chat function as you see fit to ask questions. We'll do our best to get to questions throughout Pam's overview, but if not, we'll make sure we get to them at the end of the call. So as we really consider all of the things we should do as we return to what should be, we hope, a bit more normal operations, we're speaking today with a financial expert who's worked closely with many companies from a financial perspective and help them lever and receive PPP and EIDL loans. So Pam Jordan is with us. Pam is part of Next Gen CFO. She and 14 other financial executives help businesses in the triad as fractional CFOs and business strategists. She's a no-nonsense financial expert and speaker who analyzes and streamlines the back end of fast-growing companies, creating more profit and strategic growth. She has her MBA from Elon University, has been honored with awards including Outstanding Women in Business and Financial Executive of the Year. She's been on many featured podcasts and has spoken to many business owners on stages as a keynote speaker. She's also a certified Profit First professional, and she and her team manage over $1 billion for entrepreneurs in our region and beyond. So let's get started. Pam, thank you again. And I'm going to turn it over to you to help companies and their management teams do what's right now to ensure their PPP loan is forgivable. So thanks again for being here.
Perfect. So glad to be here. Thank you so much for allowing me to come and share. I know many of the business owners that we might be speaking to right now have not yet received their PPP money or are eagerly waiting in line for the additional $310 billion to be allocated so they can hopefully get some. So for those of you that have either received your funds or are crossing your fingers and toes that you will get it, this is a detailed overview of what you can do with the money and how you need to track it so it will be forgivable. As far as the information that I'm presenting, it is current as of this morning. This is an ever-changing situation. So between now and the time that you receive your funds or it's time to go to the bank, make sure that you're following along and see if there's any changes. So everything that I'm sharing right now is current as of this moment. So just a little disclaimer on that. So to start off with, the PPP, the goal is to protect payroll and to keep Americans employed. So when you have questions about the PPP and trying to understand, does this count, does this not count, think of it in regards of the government wants to keep you hiring people and your company running, because that is more economical than you having to close your business and everybody go on unemployment. So if you keep that in the back of your mind, it helps you understand questions. So the first and most important tip is to put the money in a separate bank account. When you get your PPP money, it is all about tracking, and it will be much easier to track the funds if they're in a separate bank account. So communicate with your local bank, community bank, big bank, whatever, and put this money in a separate bank account so it is easier to track and it doesn't get intermingled with your everyday operating costs. The time period is 8 weeks, and the clock starts as soon as the money hits your bank account. So as soon as the money arrives, you need to count out 8 weeks, and that's how long you have to utilize these funds to grow your company, to survive this time, to make sure you're compensating your employees. And once that time period is up, the clock stops, and that's when you can gather all your information and approach the bank that you applied with to get the loan forgivable. But there's no delay. As soon as the money shows up, it is go time. The big question is, what can you use the money for? And again, this is as of this morning what is allowed. This can change. But right now, it is payroll costs, and that includes employee compensation, group health benefits, retirement benefits, and state unemployment taxes. You can also use it to pay interest on mortgage obligations incurred prior to February 15, 2020. And just to clarify, the rules right now do not say whether it has to be a business loan mortgage obligation, a personal. So the assumption is that it could be both. The deal is it had to be in play prior to February 15th. You can also use the money for rent or lease, but you have to have an actual lease in place prior to February 15th. So anyone that works from home for smaller businesses, and you might expense part of your home, that can only work if you had a lease in place, which most entrepreneurs who work from home don't have a lease with themselves or their partner. So it's mostly going to be commercial property that you have, but you've got to have a lease. Another component is that you are allowed to use the money for utilities. But again, it all had to be in place prior to February 15th. So if you got a new utility set up for new internet in March, that doesn't count. Or a new cell phone policy in March, that doesn't count. But anything that was in play prior to February 15th, you can use the funds for that. And the final thing that is currently allowed, but we do not have clarification on, is interest payments on any other debt obligations that were incurred prior to February 15th, 2020. So a lot of the articles and the people that I've been speaking with, some people are considering this can include vehicle loans. It can include interest for line of credit. It can include interest on credit cards. So again, there's not clear definition, but it is possible that you can use these funds for the interest portion of debt, not the principal, but the interest. There are key percentages that if this loan is going to be forgivable, you have to play by. 75% or more of the funds has to be used for payroll costs. And that is, again, compensation for your employees, your benefits, your retirement, your state taxes. 75% has to be used for that. You are allowed to use up to 25% for the other items, the rent, the interest, and the utilities. But those percentages are non-negotiable. So if you do not watch these percentages and you go in for loan forgiveness and you only used 50% of the money, they will not forgive 100% of the loan. So these percentages, 25 and 75, have to be followed if you hope to get 100% of the loan forgiven. When it comes time to go back to your SBA lender and say, thank you for the $300,000 that you gave us. We were able to pay payroll, pay some utilities, pay some bills. We appreciate it. We would like it forgiven now. These are just some of the records that you need. You need a very clear audit trail, and that's why I recommend having a separate checking account, because then you're just walking in with one bank statement that says, look, you gave me $300,000. This is how I spent it. Here are the bills. So you might need to walk in with copies of cleared checks. If you use this money for utilities, you need to have those utility bills, copies of the loans, your actual rental agreement, all of your payroll reports, vendor bills, and vendor statements. So all of this is backup to show how you use the money. If you want the loan to be forgivable, you need to make sure you use it for approved purposes. You play by the percentages of 75 and 25, and then you have to be able to prove how you used it. It's all about being able to prove. And if you don't have the documentation to back up how you spent the money, it will not be forgivable. And right now, the understanding is it is up to the banker and the underwriter to agree with you that it should be forgiven or not. So you need to go in with as much documentation and supporting information that you can. And that's why if it's all in one checking account, it's easier than walking in with bank statements and credit card statements and then highlighting all the transactions. The easier you make this for the bankers, the easier it will be for you. If you remember, when you did your PPP loan calculation and came up with your average monthly payroll, you had to exclude any earnings for any one individual over $100,000. And that was so that high income earners didn't benefit more than others. That also means that there is a max of how much you can pay employees during the 8-week period, and it be forgivable. Now, to clarify, you do not need to change people's salary during this time period. However, if you have some high earning individuals and they make over $100,000 a year, only $15,385 will be forgivable. Anything over that will not be forgiven. So it is very important that you get your payroll records and you keep a detailed report. For some clients, what we are doing is we're having them run a payroll like normal, but any high income earners, we have reduced their salary, and that is coming out of the PPP funds. Then we're running a second payroll for the high income earners for the portion above the 100,000, so that we don't have to worry about going in and tracking, oh no, we paid, Sally $16,000 in the 8 weeks instead of the 15,385, and going in and then having to explain to a banker why you spent more than you should have of the PPP money on that specific person. It's all about details and being able to prove it and understanding what the rules are. So again, if you have any high income earners, they cannot be compensated from the PPP funds, and it be forgivable if you pay them more than $15,385 in the 8-week period.
Pam, I'm going to jump in and ask a question real quick.
Go.
Hannah asked, are retirement and health expenses included in that $15,385 cap? And that's a great question.
That is a very good question. And right now, our understanding is that it is not. So it is strictly based on their compensation, not the auxiliary benefits or retirement. So when it comes down to it, you need to make sure that their payroll summary does not exceed that amount. You can continue to contribute to their retirement and their benefits. This is just salary compensation.
Thank you.
Okay, so some warnings here, guys. When you put in your PPP application, there was 3 numbers. There was the average monthly payroll, there was the loan amount, and there was the head count. That is a very crucial number. You need to know what you wrote down, because if that changes, there could be a penalty and a reduction of forgiveness. Now, it is important to know that they care about the actual number, not the who was associated with that number. So if in the next 8 weeks you have to let some employees go, but you hire other employees, as long as your head count stays the same or is very close, you're fine. But if you lay off a whole bunch of people and you use the money within those 75 and 25% rules, and you think you're playing along, and then at the end of the day, you go to the bank and you started with 30 employees and now you only have 20, they're going to prorate how much they forgive. So it is important to monitor that head count. So if you had to, unfortunately, lay some people off or furlough people prior to this, when you get your PPP money, this is an opportunity to bring them back so that you can put them back into the workforce and use this money for them. The next is there is a penalty for pay cuts. So if you've had to reduce employees' pay during this, more than 25%, there is a penalty as well, and it will reduce how much is forgivable. So if you've had to reduce your entire staff compensation by 50% so you could keep everybody employed, this money will not be fully forgiven unless you get them back up to at least 25% of what they were prior. So you can't reduce an employee's pay in Q2 or when you get the money more than 25% of what they earned in Q1. Next one is if you knowingly use the funds for unauthorized purposes, you will be subject to additional liabilities such as charges for fraud. So when you signed up for the PPP and you agreed to all the terms, one of the terms was that you agreed to use these funds for payroll, interest, and utilities. So if you go out and decide to use these funds for anything outside of that, when it comes time to go to the bank and prove how you use the money so that you can get loan forgiveness, if you use these funds for anything outside of that, they are within their right to not forgive it, but then also charge you with fraud. Now, we do not have details on what that means. We don't know if that's fines. We don't have details, but what we do know is don't go buy a car with this money. Don't go buy a computer with this money. Pay your people with this money. Final warning is any unforgiven portion remains a loan, and it is at 1% for 2 years. So if for some reason you aren't able to keep your head count the same, or you aren't able to spend all the money on payroll and your percentages are off, anything that is not forgiven will remain a loan at 1% for 2 years. And payments are deferred for 6 months from the time you got the money. So it is nice that you don't have to make the payments right away, but if you want this to be forgiven, you do need to play by the rules. As a side note, a 1% loan for 2 years is still some of the cheapest money you're going to get. Just make sure you use it appropriately so they don't charge you with fraud and get all excited. So here's my contact information. NextGen CFO is the fractional CFO firm here in Greensboro. There are 14 of us. That's my email. And then on social media, you can find me at Pam Jordan CFO. So what questions do we have?
So thank you, Pam. I'm going to start with a question I have. So I was reading an article around financial controls earlier today, and they talked about building a dashboard, and I started thinking about my work as I invest in companies. And I'm thinking that this is a great time to set up a data room or a folder and build a dashboard so that you can keep up. What tips do you have around that for the folks that are on the call?
Sure. The person who is in your organization that's in charge of the accounting needs to have a system in place. For the clients that I work with, I've created a PPP tracker that shows what we budgeted to use for the 8-week period and what we actually used, so that we can do check-ins each week to make sure that we're on track. So whether you have an Excel spreadsheet, a Google Sheet, whatever, you need to have a plan for how you're going to use that money and in real time track it. Because if week number 8, you have not used all your funds, that portion that you did not use is not forgivable and needs to be paid back either at that point or it will be turned into a loan. You also need to have a physical file with copies of all of the bills, statements, loan agreements, lease agreements, and cleared checks. Anything that you used the money for, you need to have black and white documentation for. If you want, so all of my clients, we have the Excel tracker as well as physical files where they're putting copies of all of the bills that they're paying with this money. And don't forget any documentation for payroll. So your payroll summaries, your tax payments, all of that needs to be in that file.
And then I've got another question. I have a lot of questions. Just keep going. Oh, we won't keep going forever. But so how much time do you have before you have to get back to the bank after that 8 weeks ticks off?
You have until the end of the year as of right now, because that's when the loan payments will come due. However, we're recommending as soon as you are complete with your 8 weeks to go to the lender and go ahead and start working on the forgiveness, because it's not something that you want to delay. And in November, you might not be able to find your Progress Energy bill that you paid. You want to make sure that you go as quickly as possible.
So kind of like applying as quickly as possible. You need to get back to the bank as quickly as possible, because I think about accepting all of these loan apps. Now they've got to process all of the returned money. And so I would think everybody would want to get in line as early as possible.
Yes, it's a race on both ends. It's a race to get the money, and then it's going to be a race on the back end to get it forgiven. So it's not something that you want to wait around for.
Right. And I'm going back to a couple of other conversations we've had on these calls with bankers. And this reiterates what's been said over and over again. Having a good relationship with your banker right now is vital.
100% true. And for the clients locally and nationwide that I've been able to get millions of dollars for, most all of them was because they knew their banker's name or they had their email address. And they had a personal relationship. So if you don't know your banker, now is a very good time to build that relationship so that when on the other side of this, it's time for you to walk in the door with your file and your documentation, they smile when they see you come in and they know who you are.
So as this next wave of funding gets approved, I'm going to talk positively.
It will, yes.
What can the folks on the call that didn't get funding do right now to improve their chances? And I know you don't have a magic wand, but what are some tips to help them improve chances of getting those funds?
Okay, perfect. So anyone that has not yet applied or received their funds approval for PPP need to immediately get their information together. Get your application together. Make sure you filled it out properly. Make sure you have the supporting documents together to present the lender as to why you think you deserve $350,000. Because once they release these funds, if you drag your feet and you wait 4 or 5 days to get your application together, it will be too late. The first round of money was burned up in a week and a half. We anticipate this round to be burned up in less than a week. So we are on a very tight schedule. So anyone that has not done so, get your information together, get your packet together, contact your financial professional so they can help you make sure you have a complete packet. Again, it's going to be a race. So if you walk in the door with an incomplete packet, the person who walks in the door behind you with a complete packet wins. So make sure you have everything together. And then also you need to contact your lending agency to figure out, are they accepting applications now? Who do you need to talk to? Exactly what they expect and what they need. And as soon as the gates get open, you're first one in line.
Yeah, that was my last question is, I wonder if they're accepting applications now, and that's a bank by bank.
That's correct. Yes. I read an article this morning that listed both national and local community banks that are accepting applications now with the anticipation of the floodgates being open. So the earlier you can get your information into the banker, the better.
Let's see. So today, Debbie had a call today from someone asking questions about PPP and what banks were taking applications. She's excited. She's going to be able to share some of this information she learned. So thank you, Pam.
You are welcome.
So this is a great place to tie up. So it's 3:44 and we try really hard to get everybody back on the road to work, even if it's down the hall. So thank you so much, Pam, for sharing your time and insights. I know that the folks on the call got some great insights, and I know that I'm guessing that this call will be listened to often afterwards, making sure that once they get that money, if they haven't already, that those loans are forgivable. So a couple of quick reminders. If you've not completed your census, we ask you to do so, 2020census.gov. I did mine the other day, so I was a little later than I hoped, but it's now done. And then make sure to join us tomorrow at 3 when John Gordon, our keynote for our first annual Impact Leadership Conference, will join Brent. John is a best-selling author and national conference speaker on positivity, so we're excited to meet him in October, hopefully in person, and have him share some of his messages with us tomorrow. So don't forget to join us then, and thank you all for being here this afternoon. Hope you have a good afternoon on this Thursday of a lot of rain. So enjoy the rest of your afternoon. Thanks so much. Bye-bye.